Nvidia tried to lift this market today, but the session flipped hard. One of the sharpest intraday reversals in months hit AI, crypto, and semiconductors, while Walmart quietly became the day's biggest winner. This is Market Close Daily for Thursday, November 20th. Let's get into it. Welcome back to Market Close Daily, after the bell, before tomorrow. Everything here is triple-checked off the closing tape. We're coming off a dramatic reversal across tech and crypto, a long-delayed jobs report, and big moves in retail and semiconductors. Closing snapper. It was a tough session for the broader market. The S&P 500 fell about 1.6%. The Nasdaq dropped more than 2%, and the Dow slid roughly 400 points. The morning rally, nearly 2% higher, reversed sharply by midday, marking one of the biggest turnarounds since the spring tariff scare. Under the surface, the rotation was intense. AI, semiconductors, and high-multiple tech were sold aggressively, while Walmart and selective healthcare held up better. Volatility jumped as traders moved to hedge into the weekend. Macro and Fed watch. The delayed September jobs report finally arrived. The U.S. added around 119,000 jobs, more than double expectations, but unemployment still climbed to about 4.4%. Wage growth cooled, and August was revised into a small net job loss, reinforcing the trend of a cooling labor market. This created a mixed read. Headline hiring was decent, but underlying weakness showed up in unemployment and wages. Market-based odds for a December cut ticked slightly higher, but conviction remains low. Inside the Fed, the divide widened. Christopher Waller continued advocating for another quarter-point cut, citing rising unemployment as the priority risk. Meanwhile, officials like Austin Goolsbee and Beth Hammack warned that more cuts could worsen financial stability concerns. Political pressure rose again. President Trump sharply criticized Jerome Powell today and again floated the idea of replacing him, adding noise at a time when policy consensus is already fragile. Big earnings and company stories. Nvidia was the centerpiece. Last night's earnings were outstanding. $57 billion in revenue, huge data center growth, and strong forward guidance. The stock surged early, but enthusiasm faded. Nvidia reversed and closed down roughly 3% as traders took profits and reassessed stretched AI valuations. The semiconductor sector sank with it. AMD dropped nearly 8%, and Micron fell almost 11%. The chip index fell nearly 5%, one of the steepest declines in recent weeks. Meanwhile, Walmart delivered a standout performance. Shares gained roughly 7% after an earnings beat and a raised full-year outlook. Strong e-commerce, resilient grocery demand, and growing ad revenue drove the outperformance. Regeneron gained around 5% after expanded FDA approval for EYLEA HD, while Solventum climbed following a cash acquisition announcement. Sector Roundup. Technology and communication services led the decline. AI, chips, and cloud stocks saw heavy selling, and the volatility index closed at its highest level since April. Consumer stocks were mixed. Walmart's strength highlighted resilience in value-focused retail. Higher-end discretionary names remained volatile as tighter financial conditions continue pressuring big-ticket spending. Energy softened again as crude stayed below $60 a barrel. Gold dipped slightly, but held near record highs above $4,000. Industrial metals traded cautiously on global growth signals. S&P 500 gainers and losers. Walmart led the gainers after its strong earnings and raised guidance. Regeneron and Solventum added strength to healthcare, providing rare stability outside the tech-heavy segments. On the losing side, Jacobs Solutions dropped more than 10% after reporting weaker profitability tied to its Amentum investment. Micron and AMD were among the hardest-hit tech names. Crypto-linked stocks like Robinhood and Coinbase fell further as Bitcoin continued its downward slide. Deeper cuts and names to watch. For active traders, Micron is a standout setup. It dropped almost 11% on heavy volume, setting the stage for a potential bounce, or a deeper breakdown. How Micron behaves around support levels over the next few sessions will signal whether AI hardware sentiment is stabilizing or weakening. For long-term investors, Alphabet remains compelling. Berkshire Hathaway's newly disclosed $4.9 billion stake, alongside trims to Apple and Bank of America, signals where disciplined, valuation-aware capital sees durable AI and cloud exposure. Crypto and metals check. Bitcoin fell below $87,000 today. It's now down roughly 20% from highs near $125,000. Crypto-linked equities extended losses along with the move. Gold slipped slightly but held above $4,000 an ounce. Oil stayed under $60 a barrel, keeping pressure on some energy names. Transportation and consumer-dependent areas benefited from the softer energy prices. Smart money and big moves. Berkshire Hathaway's portfolio adjustments remained a major talking point. Building a multi-billion-dollar Alphabet position while trimming Apple and Bank of America reflects a shift toward diversified AI and cloud exposure, and away from over-concentrated mega-cap holdings. Long-term capital continues flowing into AI-related infrastructure, power grid upgrades, nuclear capacity expansions, and data center energy projects. These investments shape the future of AI far more than day-to-day price action. What to watch tomorrow? Global manufacturing and services PMIs hit tomorrow. After today's labor data, a weak services print could meaningfully shift expectations for the December Fed meeting. New York Fed President John Williams speaks in the morning. In a divided central bank, his tone will be closely watched for clues on how leadership views the mix of rising unemployment and softening wages. Retail stays in focus after Walmart's big move. Watch names like BJ's Wholesale and other staples-driven retailers as traders evaluate whether defensive consumer strength continues into the end of the month. Closing. That wraps up Market Close Daily for Thursday, November 20th. We saw a sharp reversal across the AI complex, strong results in retail and healthcare, and a growing divide inside the Federal Reserve. As always, manage your risk, stick to your plan, and we'll be back tomorrow after the bell. Before tomorrow.